Hey guys, it's a market update. Wait till you see this, right? Because this is absolutely insane how this works. And there's literally no way out apart from us making sure we're out of it in BTC and other assets if you need them. So look, we're at an all-time high right now, trading at 67,000 for Bitcoin. Yes, the all-time high is here, but it touched it and then rejected. We've now broken out of this downtrend. You can see it, right? Clear as day. This is on the month chart. If we go down to the week and the day chart, it's maybe a little bit more muddy. You can actually see some of the candles, closing around here for those charts. But monthly is going to give us a really good signal. Broken out of the downtrend, right? Testing resistance again, 7% away from an all-time high. I mean, it's a great position to be in, considering usually the next 12 months are like the go time for Bitcoin in a Bitcoin cycle. So super bullish right here. And this is insane, which I want to talk about. If you do trade, check out Bybit down below. If you don't trade on there yet, up to $30,000 as a deposit bonus. I'm going to be updating the crypto course as well very, very soon. Really important videos. If you have the course already, updates are completely for free, but you can check the link below if you haven't got it yet. The thing that every top investor is talking about right now is inflation and all roads leading to inflation. You can see Paul Tudor Jones here is talking about this. This isn't the important thing. There is no way out, and this is why I think Bitcoin is our way out of this and our positive way to play the only logical outcome of this. This is the federal government's, essentially their profit and loss statement, right? They're making huge, huge deficits. This deficit is tucked right down here. It's actually 1.8 trillion, right? Which is the second line item. It's the second biggest line item right here, but they tuck it right down here as this tiny little deficit. It's bigger than all of this stuff, right? So the US government is window dressing, right? Hilarious. But in any case, this is an issue because this is growing and growing and growing and it needs to be financed. Look at the net interest. It's one of the biggest outlays. It's an issue right here, right? And so this can spiral up into just more and more and more. So what's the plan to actually pay this down? You can tax more. You can literally just take money and try and pay it off. You can't do that though, because if you're taxing, what you're doing is canceling that money out of the system and you're reducing that stimulus from the economy, which means GDP will drag down and that will not help debt to GDP ratio. So if you tax more, you drag GDP down. Yes, there is something called the Laffer curve. Maybe you can increase that little, tax a little bit, but essentially the more you tax, you're actually going to drag GDP. So you can't really do that. Can you just cut spending? Again, it's the same thing. If you cut spending, what you're doing is reducing that stimulus in the economy, and so a drag on GDP, but you need GDP to be higher, right? So you can't do either of those things. So how can we get this, right? Let's say they do tax a little bit more, and let's say they do spend a little bit less. That is going to drag GDP. So that's where they have to go over to the central bank and say, look, you need to bail us out again. You need to create this inflation. You need to reduce interest rates. You need to stimulate and create and incentivize the banks to actually create credit and try and stimulate the economy, because we need this GDP higher, even though we're putting the fiscal side out. So either way, right, all of this, they need to inflate this debt away. You cannot pay it off, because as soon as you try to pay it off, you actually drag GDP lower, you create a recession, the whole economic system collapses, right? So there is only one way to pay it off, which is we need inflation. So like PTJ says, if we want to stabilize the debt to GDP ratio, which is absolutely necessary, we need to run the most dovish monetary policy we can without letting inflation become too much a tax on the citizenry. You have to inflate the debt away. And that means either from you can't do it in the fiscal, you have to draw down the fiscal side, which means you have to rely on the central bank. They're going to have to print some money. They're going to have to drop rates. They're going to have to run the most dovish monetary policy possible if they do want to drag this fiscal out. For right now, this fiscal is so stimulative, right, that it's just, you can see how strong it's not a strong economy. It's just GDP's high because of all the stimulus. So if they keep it like this, then it's just going to keep going. It's going to get worse and worse and worse. If they try and drag the fiscal side down, the central bank has to step in. Otherwise, GDP will just go negative. So either way, that means asset prices go up. Bitcoin is the way to play that. This is why we have Bitcoin cycles. Central bankers know this. They're not dumb. Everything you hear out of the central bank is not actually really what's happening, right? It's just a narrative and it's nonsense. We have these cycles because what they do is they cut interest rates and they want to stimulate inflation, right? Because they want to debase the debt. They're trying to help the treasury out. So that's what they do. They create that inflation, which is a huge bull market, right? Which is great for assets. But that inflation comes out in everything. Comes out in house prices, which become unaffordable, comes out in groceries, comes out in cars, etc. So the citizenry says, what's going on here? I can't afford anything, right? We all notice. So the central bank has to step in and say, oh yeah, we're going to have to draw down. We're going to have to create some disinflation. So that's where we get these bear markets. What they do is they do that for a period of time, maybe 12 months. That lets all of their fake metrics like GDP, CPI, core PCE, all fake, right? They're lagging on purpose because they draw down for 12 months. That data comes out lagging for 12 to 18 months. And we're all saying to ourselves, oh, look, GDP's, CPI is fine. It's around 2%. See, it's at target. Meanwhile, that lagging data is showing 2%, which is completely fake. Meanwhile, they're going to slash rates again because they have to finance this deficit. So slash rates again, let the Treasury refinance at the best possible rates to try and slow this down. And that creates the next bull market of inflation. So that's why we have cycles. The central bank essentially making us poor over time by creating inflation, pretending to draw it down, but it never really does. Prices never go down, right? Because they need inflation to debase the debt. That's why we will continue to have cycles. We're in a cutting cycle right now, which we're in a bull market, and that's why I think the bull market will continue. We're not even anywhere close to the peak of this cycle. We're actually mid-cycle by a lot of this data. Now, remember, yes, inflation is still too hot in the States. It's actually too low in China and Europe right now compared to their targets. It's just the States, which is really the main one. Maybe that's going to continue to come down with all of their lagging data, probably will. But really, they're ahead of the game. They know what's happening, right? So they're cutting rates because they know they need to create this inflation again and make sure the Treasury refinances at the best possible rates. So global M2, money supply, the central bank needs this to actually increase, especially if we're seeing inflation come down because of what they did over the last 12 months. If the fiscal side wants to sort itself out a little bit and they try and draw that down a little bit, you're going to need money supply, central bank and private banks creating money, pushing asset prices higher and pushing inflation higher. You can see about mid-cycle, literally correlated to the Bitcoin price. As we peak in M2, Bitcoin peaks. As we peak in M2, Bitcoin peaks. Bear market for M2 and Bitcoin, and we're just rising again. M2 is nowhere near its peak, and I think they do have to inflate this debt away, which means we are going to be in an inflationary period, and that means M2 does have to inflect to the upside as well, especially if they try and draw the fiscal side down. And so we are not at the peak of a bull market, still mid-cycle. That actually shows as well, we're still mid-cycle. We're nowhere near the peak. Peak would be somewhere up here later on, right? So I think I'm really, really bullish. I'm about to describe it in real terms, which actually doesn't sound very nice, but this is the reality of it. In 2008, they had a decision to make. They could pay for their mistakes and take the hit and reprice everything, or they could steal our money. I'm talking about my generation's money. They could steal money from us. They could steal our labor and our output into the future and make us pay for it. And that's what they chose. And so our generation has grown up with this insane issue of we're going to have to pay for their mistakes. And what I mean by that is they stole all of our purchasing power, right? And they put it into markets to make sure that they didn't collapse for them. They didn't want to pay for it. What that meant for us is that housing and stocks and other assets went up and mooned. So we come into the workforce and we can't afford anything. We can't afford the assets that our parents had. They bailed themselves out, right? We now can't have that same lifestyle because they pushed up all the asset prices. We're poorer. They stole from us. The reason why Bitcoin is so important is because it is the only bargaining chip we have in this whole situation where we can say, no, we're not paying for that. You pay for that. So some people will pay for it and some people won't. If you want to stay holding fiat currency, you will be paying for it. That is what is going to lose purchasing power and wealth. So if you're in fiat currency, you will be paying for that. And you'll be paying it 10, 12% a year for the dollar. That's the best one. If you don't want to pay for it, which you shouldn't because you didn't create it and you didn't steal the money, then you can go into assets if you want. But look at housing, look at the stock market. Returns are low, prices are very high. Or you can buy Bitcoin, which is our bargaining chip to say, you know what? The value we create, we're not going to play your game in property and stocks. We're going to go into Bitcoin. And we're going to get that wealth back from you, which is rightly ours that we're creating now. This is federal debt held by the public since 2008. They stole our stuff. This is federal debt in red, and then the total net worth held by the top 1% in blue. You may say, those nasty billionaires getting rich. You can be part of that by buying assets that demonetize what they did, which is stocks and housing, right? That's mostly what they own. Bitcoin is our bargaining chip to say, you stole our stuff and we're taking it back. So this is what Bitcoin is. It's our generation's way of saying, you stole our money before we could even have a vote and have any sort of say in the matter. Well, now it's our time to get things back. The people that will be paying for all of these debts that we have are fiat currency holders. The debts are denominated in those fiat currencies, the government's money. They have debt and they don't pay it back. They just inflate it away. It's the only option to prevent full financial system collapse. It is the playbook. There is no other playbook. It's inflation. So if you hold dollars or dollar denominated debt or any other fiat currency, you will be paying for those debts. So who holds the most in treasuries? Individual investors, for sure. Some in America, some outside. China, Japan, Germany, UK, other emerging markets. For certain cryptocurrency dollar holders, right? Dollar stablecoin holders, mostly in developing markets. They're escaping their fiat, which is debasing even faster than the dollar. But if you hold dollars, you are paying for those debts. So thank you for your service. Everything's going to get more expensive, including Bitcoin and housing and other assets and food. Everything else will get more expensive over time because that is how you will be paying in a lack of purchasing power via holding the government's currency, and it has to pay those debts. You will be paying those. So you have to get out of the dollar, whatever it is. Okay, whatever it is. Could be Bitcoin, could be anything else. Real net interest. This is Janet Yellen. I don't have a hard and fast rule, but I would not like to see debt to GDP ratio above 2% on real interest rate costs. You can see here we're already above that. So how do you get that down? Well, you let inflation rise, right? Or you cut policy rates. So again, it's inflation. So if you hold fiat currency, you are paying for the debts, right? So don't hold fiat currency if you don't want to pay for the debts that you didn't take out. This is also an insane graphic here posted by Natalie Brunel. The number one issue amongst all age groups is inflation. And the solution to inflation, which is removing yourself from the currency so you do not have to pay for those debts and investing in assets that get pushed up by the stimulus and inflation, like Bitcoin, is literally dead last. The solution is staring us in the face. Hopefully this channel can push out some education here about this. You may not like Bitcoin, you may think it's too risky, but housing or stocks or something else has to be used. If you hold the fiat, you'll be paying the debts. Some updates to the crypto course will be coming on this and what I think is happening in this cycle, because we're mid-cycle. I think another leg is coming. And if you do trade crypto, Bybit deposit bonus down below. I'm James' Money TG. Cheers for watching, and I'll see you in the next one.